Good morning and welcome to this weekly market update from AGM Markets. Today is the 22nd of February 2013. What we'll do today is go through the charts. We'll have a look at Euro dollar, cable, dollar Swiss, Aussie dollar and gold. Mainly just going through technical analysis and kind of review what's happened in the week and also look at any potential chart setups that are out there. For any new followers, we have 3 moving averages in each of these charts. The red one is a 55 simple moving average. The purple is a 100 simple moving average, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. Okay then, let's have a look at the euro dollar. So this is the daily chart. We've spoken about the last few weeks about this big trendline support from the lows in July. And you can see yesterday we got a daily candlestick close below this trend line, so that is what a lot of people say that's technically an official break off the trend line. But of course we have the weekly candle as well, so keep an eye on the weekly close. But in terms of the daily chart, it has technically broken. What's just below this trend line support is 100-day moving average, which is around 1.3140. And then we have the 200-day moving average down at 1.2885. So yeah, it's finally broken. I mean, we have been saying that it's been due a big retrace because it's such a strong uptrend. I thought it would personally retrace down to the trend line and maybe bounce again, but we have broken below this. The other fib setup I was looking at, a lot of people were looking at, is this from the recent bounce off of the trend line down. Well, yes, from the recent bounce the trend line up towards the to the top. So I'll just delete the 78.6 because we mainly focus on the 50%, 61.8 on there. Yeah, so well, if you zoom in actually, you can see that yesterday's daily candle did in fact just about close above this 50% retracement, even though yes, it has technically closed below this trend line. So a lot of people say that, well, I mean, today's candle, it is looking heavy, but if we do, it does start to pop up and close above that 50%, then I would personally say that the trend, it should continue up really. But hey, a lot of people say the trend line support is maybe slightly stronger. Because this is the, if you look at the daily chart, this is the whole daily chart and it's just a pure uptrend and we have broken that. So I personally think it may struggle to close above that 50%. It looks like it's one that wants to come down and maybe test this 100-day or the 200-day movement average. So I'm going to delete that fib off there, but do keep an eye on it anyway. It is the 1.3188 level. And of course that's a daily candlestick close below the 1.32 handle as well. So, and the 55-day moving average below this as well. You can see there on the daily chart a few days ago. Well, in fact, it's been last week, I think. You see that 55-day moving average, really a nice sort of reversal candle there, but there was a bit of upper wick, so it wasn't the most convincing of reversal candles. But we did get a nice slight pop there on that candle. But there you can see the next daily candle really just pure bearish engulfing, a huge selling pattern there, and you can see these last couple of days candles have followed on from that, so that's why candlesticks are so important. If you want to look at the bigger fib, which is from these lows down here in July at the 1.2040 handle, if you draw it to the high there with the 50%, funny enough, does coincide with the 200-day moving average. So if we do come down it, then this 200-day moving average will probably flatten out. And it could be bang on this 50% level, so keep an eye on that if we do come a lot lower. I wouldn't have thought that we would have come down that low by next week's video, but we'll maybe do the video on Wednesday and see whereabouts we are. But the euro dollar's been very interesting. The uptrend's been holding well. The fibs have been very technical as well. So yeah, let's see what happens at the end of the week. Pound versus the US dollar. We spoke last week about its key support level at the 1.5340s, which is actually a previous support as well. If you look at the weekly, the monthly as well, you can see we had a lot of spikes around here. So yeah, that's really. I mean, we really have just come off the cliff here. There's a lot of stuff like the MPC meeting minutes the other day. Mervyn King wanted more quantitative easing, which is obviously going to be very bearish for the pound, and that's what we've happened, and that's what we've seen. It really has just come off a cliff. I mean, in fact, all year really, it's just really just absolutely tumbled. Yesterday's daily candle was a nice reversal though. I mean, that's a really good hammer pattern, that, so we may start to get a nice bounce. I wouldn't be surprised to see people selling into any weakness. In terms of daily, the fib I'll be looking out for will be from the ultimate highs to yesterday's low, and if we get if it really does start to bounce up, and it's a long way away from it yet, the 50% comes out around 1.5762. And on the 4 hour, you're going to have people drawing fibs from I mean, any of these bounces really. That's why I prefer, I mean, the daily chart is the clear high, so there's no questioning if that's the right place to pot a fib or not, because it's a perfectly good sorry, maybe 2 seconds. Yeah, it's a perfectly good place to plot a fib, whereas if you maybe, it's hard to pick the right sort of spike high. It could be that one there, could be that one there, could be that one there, or that one there. So that's why I like to look for the obvious sort of highs and lows. Look at the dollar Swiss daily chart. I've left this up from last week, this triangular pattern, because we said it's all about this big support line here and this trend line resistance. We've now got a daily candlestick close above this trend line resistance, and you can see in yesterday's candle we closed above, came down, spiked. This spike tested this trend line resistance, so the trend line resistance now acting as a new support. So if we do get any further sell-off, if it starts to retrace, then we'll be surprised to see this trend line resistance act as a nice support level. But that's the key focus really. I mean the next so we'll delete this, well, we can leave it up actually. If we zoom in a bit, in terms of any buying opportunities, if we do come under, look for the obvious low there to the high. If we come down to the 50%, but it looks like it really is just starting to break out on this daily chart. So the next sort of real key resistance will be that high there from the 14th, or that 200-day moving average there, which just comes in at 0.9490. But no, an interesting chart, the daily one. I mean, flip it to the shorter term ones. On the 4 hour, we have a trend line support there. That's quite a good one to look at actually. I'd keep that definitely on my chart. Yeah, and that's pretty much how I'd keep my dollar Swiss set up really. Well, actually, one other thing, if we flip it to even a shorter term time frame, the 1 hour, I'll just delete this trend line resistance for a sec, it's getting in the way. A lot of people will be focusing on this fib here, so from the lows to the highs, if we do get a nice sell off, then look at 50% at 0.92. Sorry, I've drawn that wrong. 0.9258 is the 50% from that move, but it looks like it's really starting to pop high, and it may even break those highs before, anywhere near before it comes down to that 50%. If we look at the Aussie dollar chart, the daily, it's really just been choppy in the last sort of couple of weeks really, maybe even forming a bear flag here. I mean, it has got a lot of room to come down, especially if you look at, I mean, the ultimate fib from the lows to the highs on this daily chart. We're a long way away from the 50%. It looks like it's just trying to retrace and maybe come down here, so I would not be surprised to see it break that sort of bear flag and come down and test this 50% at at 1.01. Also, if you look at the 4 hour, we have a trend line resistance in play, and also this 100 bar moving average is acting quite well on this 4 hour chart. It acts as decent resistance. You can see 2 peaks there, and it really has sold off aggressively on that last spike to that 100 bar moving average, and we're testing it currently, and it's starting to spike as well. Yesterday's the last 4 hour candle was a big spike high, and this current one has gone up, spiked, and so I wouldn't be surprised to see a sell off there. But yeah, that's the main interest for me really in terms of the Aussie dollar. if we look at the gold chart, gold's been really interesting, especially in this daily chart. The big fib from those lows towards the highs. We spoke about the 61.8, we've got a nice spike there, and then it got stuck at the 55-day moving average and the 200-day moving average as well, and we really have to sold off aggressively now. It's broken all the the two key fibs. So the the next sort of level of support, in my opinion, is the 1526.91. That's the real big support there, in my opinion. Also, actually, if you flick it to the weekly, we'll just zoom in a bit here. You can see there's a big support level here at around the 1566. You can see it acts as multiple supports there, especially in 2012. When we spoke about it many times on the video, multiple spikes below this 1566, and then it's closed above. And surprise, this week's candle has already pierced below this, and it's already come up above. So if we do close above this, and if it starts to form more of a hammer candlestick pattern, we wouldn't be surprised to see it come up and rotate higher and maybe test this 100-week moving average and 55-week moving average there. You can see it much clearer on the daily chart. We've had a lovely, nice reversal candle here. It does have a bit of upper wick, and it's starting to already starting to pop it. It's trying to pop up towards this 55-day moving average. If it does come up towards there, I draw a fib personally from the highs of 2013 to the lows there, and look out for the 50%, because a lot of sellers could come in there and bring it towards the downside. But yeah, that is mainly how I'd keep my gold chart set up. Okay then, that's all for today. Hope you've enjoyed this video, hope you found it useful, and I'll catch you next week and we'll look over the charts again. Also, feel free to comment under the video on YouTube if there's any sort of pairs that you want to look at next week, and also on our Twitter feed at AGM Markets. Cool, thanks for listening. I'll catch you next week.